Right. So you are now so proficient, even though we haven't gotten into putting it all to use yet, and we haven't even gotten into the extremely deep versions of what we're teaching with the tools. But that's fine because you already have more knowledge under your belt, especially if you've gotten to this point in just watching this than most traders do. And you already have a better understanding of how trends function than most traders do because most traders, I apologize for that, because most traders, there we go. Because most traders are stuck, and you can look at this from the entire space, and you've probably seen it yourself, and you've probably even been there because I've been there and I know it, are stuck constantly trying to get in on the opposite side of the move, are stuck on the wrong side of the trend, are constantly thinking there's a pullback that's going to happen, are just constantly waiting for some zone to get traded to, and as a result, they're always on the wrong side. I've done this, I've seen it, but now you understand how prices truly move and how the validation of demand actually forms the likelihood of delivering that demand, okay? And we're going to talk about this further soon, but now we want to take this to the next step and show the edge cases, or not even edge cases, but more examples of what this looks like as we look at this across more time frames. So here's the same thing, but with a little bit more interest. And there's some arrows here, so I'm going to explain that in a second. But it's the same thing. There's that same down candle by the up candle. Same thing being made up. This is that same down candle and the up candle. The only difference now is I've dropped to an even lower time frame than the time frame that we looked at as the lowest time frame right here. So again, similarly, in the scenario, and you're going to learn everything about time frames, don't even worry. In the scenario that this was, let's say, a daily, or like we just looked at all the examples, a 4 hour, and this was a 2 hour like it was on gold. Now we're going to assume that if this is a 4 hour, this right here is likely a 15-minute, right? So again, you're starting to see how the interaction of timeframes exists, but also starting to see how orders and how we use timeframes to actually see orders rather than use timeframes for any given pattern. Because the reality is that timeframes are not there for this crazy pattern where you're like, it has to be perfect on this time frame and this one, and then when you have the crossover, it's just not how it works, right? The reality is there's a function of the market, and the function of the market is how money is entering it. And sometimes the 4 hour is going to be a little bit unclear, while the 3 hour and the 6 hour are perfect, right? And within that, you have a 15-minute that might be somewhat unclear, but a 30-minute is perfect. And that's what the trade becomes based on. And we're going to talk about this all down the line. It's all going to make sense, but again, starting points. So in this scenario, this is a 15-minute, which is, again, this lower time frame. Again, this action here will be broken up. And that action might be broken up into, as you can see here, down moves, up moves, and down moves and up moves, right? And then comes the finale, right? This could be made up of an open here, that's that open, right? Within there, you have multiple of these closes and opens and closes and opens and closes and opens and closes and opens and closes, etc., right? To make that low, which would be this low, to then make this high, which is this high, and maybe it just runs up like this, okay? And in that scenario, again, the same thing is prevalent, but now you might notice something interesting. So if you've already started doing some random testing on the stuff that you're learning, which you might have ended up doing, and that's okay, because again, you're only going to become more proficient, and the stuff that you're testing now, it should be showing you unprofitability. That's the truth. If you've already started testing the stuff that we've looked at, you shouldn't have a profitable system just yet, but although you might, because again, this is proper trend, but you shouldn't have profitability. And you might have actually noticed this thing. And if you haven't, you're going to notice this now. What's going to happen is the lower you go, well, all of a sudden you're actually going to see demand validations, right? This is a demand validation as this was being formed. So again, we don't know how large this guy might have been because at the time, this was this size, right? And in the scenario that this market continued to move higher and just moved higher, the reality is this is what the move would look like, right? There it is. And that would be, again, that demand zone, right? And just as we go lower, this would be the MD. This would be the MD. And then this inside of here would be that validated demand prior to that move happening, right? But in this case here, that validated demand in this scenario failed. That validated demand was not there to hold price and instead continued moving lower and lower and lower and lower until another up candle came in. And that up candle in this scenario validated, as you can see by the green box I've drawn, because the green is what we've been using to decipher validated demand at the moment, created a new validated demand. And similarly, because this became the real move, because it became the real validated demand, what you can see is price never returns, and price takes off. Now, at the same time, because we've now went lower, this is where your fractal understanding of ment blocks is going to come in. And this is going to become very important in the future when we get more advanced about them and start looking at them at a fractalized level for actual entries, for consideration of where you are in terms of structure, moving averages, and all the other things that you're going to learn soon, but not right now. Okay. This is your MB, right? An area that is denoted by more than one candle. And again, similarly, as price trades through that high, it validates, okay, an MB, validates MB demand. Now, these arrows here are actually examples of where a validated MB would also be validated. So this is where you start understanding true fractality. And in the event that your entire trading system was simply buying through an MB, so let's say you start seeing price come down like this, right? You look at a lower time frame, you see this, and you say, okay, I want to be part of the move in the event that demand is eating this up and starts a big move higher, right? But you're not sure when that's going to happen. One of the systems that you could use that, again, I don't think you should use, this is just theoretical at the moment, is you would buy stop simply an MB. In this case, if you buy stopped this MB, so you place a buy here, a stop loss here, and this is your trade, right? If this was your trade, for instance, you get tapped in, demand validates, you probably move to break even instantly, and this is something you're going to learn in the future as well, because we spoke about the fact that once you understand this is how markets function, it's going to become very important in management later, right? Then price delivers. Since demand is validated and price should move because demand's validated. But let's say you weren't sure. Let's say you don't like the fact that price could just get above here and then keep going down. Something you might do is you could use the high of any other candle prior within the range that's being built now, which is this down move, to also be an MB buy stop. Those could all act as their own entries. So this is where you learn about MB fractality, okay? Because as much as this zone right here is a ment block, because again, it's denoted by more than one candle, the reality is this right here is also a ment block. As we move this higher, this right here is also a ment block. This right here, the trades through that high, is also a ment block. This right here is also a ment block, which just happens to correspond to this demand zone that we've seen that does become validated through this move here on a higher time frame. And the reason I'm breaking this out to you now is because I want you to recognize that in the event that you're a trader that buy stop, let's say this high, like that, okay? This is where I'm going to break some minds, but that's okay because you're going to get better. Let's say you're a trader that said, okay, you know, I don't want to wait to buy stop the overall demand. I know that demand is forming, and if this gets above there, it's going to be validated, and then I'm going to get a big move, okay? You also don't want to start trading in here at this MB because it's not enough for you. You also see the validated demand here, so you're like, okay, price is probably going to start to move higher because, again, if it doesn't return and demand is validated, it's probably going to move higher. I want to buy stop this area here. What is that? You know, on a higher time frame, that looks like a buy stop that just happens right here. So that means that you randomly got into this trade right here. But why could that work? Well, because again, fractally, we don't think in a time frame, we think in the actual move. So what's funny is this move right here, when you buy stop it here, the real thing you're doing, okay? So this is where I might break some more brains, is you actually, again, not perfect to scale. There you go. We can make it to scale. You're actually buy stopping, if you choose to buy stop this MB, because for you it's clearer to buy stop this MB or the formation of this now validated demand, you're actually buy stopping up potentially other time frames because again, we're not always sure what time frame this is happening on. You're buy stopping this time frame's demand. Okay? So that's what's happening there. Right? So you're actually buy stopping the validity of this demand, which might have just been on, you know, so again, similarly, if this was a 4-hour chart, there it is, that's a 4-hour chart, okay? This right here, if that was a 4-hour chart, this could simply be, right here, a 3-hour chart. It just might have happened that the 3-hour closed here and then opened here and this created that demand. And this was the 4-hour MB. Okay, so just to show another example of this now, we can go to any one of these examples here. We'll use a super easy one. So we'll use that, we'll use we'll use one of these UJ ones, right? These are UJ on the weekly. So we'll just go to UJ on the weekly really quick. USDJPY on the weekly. Go like this, go like this. Let's get rid of all this. Okay, so again, similarly, right, this is one of the demand zones we've personally looked at through the examples in the course at the moment, which is this guy right here, which we know is a validated demand zone through that high. Okay, phenomenal, right? And we know inside of it, if we went inside of it, which we did right here, if we went inside of it on an 18-hour, we're going to find those demand zones within it. But again, we don't know every time this is happening. Okay, so when it's building a move like this and we're considering any one of these points as a potential buy stop or as a potential demand validation or an MB validation, what's happening is we might just be looking at, you know, a time frame that's very close but not exact. So for instance, if this is a weekly, you know, if we look like at a 4-day chart, no, maybe a 3-day chart, let's keep doing, there you go. You know, this is perfection in regards to what we just did, right? So all of a sudden, at some level, the buy stop of a lower time frame ment block or MB might just become the buy stop of some kind of demand zone that we cannot find because it's on a random time frame. But again, that's because we don't think in time frames. Okay, I know this might be so confusing right now. I hope you're just writing down notes. It's okay. It's going to become understood. But right now we are laying that foundation because, again, a lot of the education in the industry is complete fucking dog shit. A lot of it is just literally there to, I mean, it's honestly not even, again, it's not even helpful to you, right? But hopefully if you're confused right now, that's because you're being hit with something that's going to potentially change the way that you orient yourself and think about the entire market. So again, that weekly, right? That weekly, that's the zone. Notice if we buy stopped inside, right? We're buy stopping something here. That's an MB of a lower time frame. So we know on a 3-day, that's a demand zone, okay? But at the same time, on an even lower time frame, okay, it's going to be just an MB through a high or an MB through a high. Let me showcase that. So again, instead of having to find it, we could just, actually, we'll try to find it. We can go to a daily. And actually, the daily is a bad example here, maybe a 4-hour. Again, we're just going to keep looking until we can find one. And this is actually going further into my example of why, okay, of why this goes directly into the example that I was providing earlier of how we can't always find the time frame that has the perfect look because it's not always going to exist. But this is what's happening. This is what we're trading. This is what we're starting to understand about the fundamentals of the market. And as we understand that, we understand how the MBs or the inside demands, whatever, are interacting to make this possible, right? So when we're buy stopping one of these points, like for instance, if we buy stop a high like this, right, that might just be the buy stop